Hello, in today's video, we're going to be introducing the new Day Trading GPS SPX Daily Key Levels V3.0 indicator. So this is the newest version of the indicator, which was just released yesterday, February 12th, 2026. And the purpose of this video is we're going to go over all the new features. So first off, we're going to go through a new feature summary, which is going to take about 10 minutes. If you want to skip through this and go right to the charts where we start showing the new features, just skip ahead about 10 minutes or so. And you can also do that in the chapters on the video description. Okay, so first off, SPX v3.0 now adds XSP CBOE Mini SPX Index Symbol Compatibility. So the previous version, the v2.0 version, worked on two SPX symbols, the CBOE SPX, which is the main official SPX for those who prefer trading SPX index options, and it also worked on the SPX 500 8-cap symbol, which is the Forex CFD version of SPX for those traders who prefer trading the Forex CFD versus trading SPX index options. So now we've added compatibility for XSP CBOE, which is the official mini SPX index that trades at 1/10 the value of the main SPX index. The XSP mini index also offers index options for 0 DTE and other expirations. And since that XSP mini index trades at 1/10 the value of the main SPX index, many traders find the XSP options a more affordable trading vehicle option since the XSP index options are typically 1/10 the cost of normal SPX CBOE index options. V3.0 is we've also added an integrated stop loss and take profit levels sections for contextual key level trades. So these contextual key levels are the PMH pre-market high, the PML pre-market low, the YDH yesterday's daily RTH session high, YDL yesterday's RTH session low, and YDC yesterday's RTH session close. This adds user customizable stop loss and take profit controls for taking bullish and bearish trades off of the PML, PMH, YDH, YDL, and YDC levels. There is a separate bullish trade section and bearish trade section. So each of these levels within each of those sections has its own individual settings in each section. So the user can individually control which of those levels within each individual section, bullish trades or bearish trades, that they wish to enable stop loss levels and take profit levels for. We also have added a comprehensive advanced alert system for all key levels. So this includes the BBKPL level, the resistance levels R1 through R6, support levels S1 through S6, the pre-market levels, the PMH and PML, and the previous RTH session levels, the YDH, YDL, and YDC. So the alert types are, you have crossed above and closed above alerts. This triggers when a candle crosses above and closes above the specified level. A visual label appears on the charts for confirmed breakouts. Individual enable disable controls for each level. Each level also has the option to enable the acceptable range filter if the user desires to turn on as a filter for that specific level. Also, cross below and close below alerts, which offer the same controls as the crossed above and closed above alerts. And this would be for bearish signals of when a candle crosses below and also closes below the specified level. Also, the acceptable range filter is there for crossed and closed below alerts as well. Okay, the optional acceptable range filter that can be applied to any individual key level alert for enabling a optional filter that prevents false alerts from overextended moves. The default setting is 85%, which is the recommended maximum. Many users may prefer to specify a lower setting through practice, and the user can specify whatever percentage that they prefer to have this alert be set to. So the function, the alert only fires if this optional range filter is turned on. Then the alert only fires if the qualifying candle closes within the acceptable range percentage. So this is an individual control that can be enabled or disabled separately for any level. So the purpose, again, it filters out candles whose closing price is too far from the level in question to support a favorable risk-reward trade. When a candle closes beyond the acceptable range percentage, the distance to the stop loss for that particular level to be trading from is too large relative to the reward available at the target levels. In these cases, the trader can monitor succeeding candles for a better trade setup on another level, or monitor succeeding candles to instead wait for price to retest the original level for a better trade entry. Also, there is a special BBKPL level opening 9:30 a.m. candle alert. This is a dedicated singular alert specifically for the market opening candle at 9:30 a.m. Eastern. The trigger time 9:30 a.m. Eastern opening candle only. The function, it alerts when the opening candle closes above or below the BBKPL level. This alert also has the acceptable range filter. It's highly recommended to use the acceptable range filter for this alert. So the purpose, when combined with the acceptable range filter, filters out 9:30 a.m. opening candle whose closing price is too far from the BBKPL level to support a favorable risk-reward trade based off the BBKPL level. When the candle closes beyond the acceptable range, the distance to the stop loss levels used for trades based on the BBKPL level is too large relative to the reward available at target exit levels. So in these cases, the trader can again monitor succeeding candles for a better trade setup on another main R level or main S level, or one of the PMH, PML, YDH, YDL, or YDC levels, or instead monitor succeeding candles to wait for price to retest the BBKPL level for a better trade entry. So note, this alert is only for the 9:30 a.m. opening candle only, for whatever your chart time frame is set to for that opening candle. For continuous BBKPL alerts throughout the session, you would simply enable the standard crossed above, closed above, or cross below, closed below alerts for the BBKPL level. SPX 3.0 also introduces daily automated market scenario analysis. So every trading day, the SPX Open can be classified into one of 6 structural setups based on the relationship between these 4 key levels: the PMH, PML, YDH, and YDL. There are 6 different market scenarios. Market scenario 1, inside yesterday's range. Today's pre-market range PML to PMH is contained within yesterday's RTH session range YDL to YDH. Market scenario 2 is full gap above, meaning today's entire pre-market range PML to PMH gaps completely above yesterday's RTH session high YDH. So that means the entire pre-market range, the PML to PMH, has gapped completely above. So that is a true gap, not just your normal gap where just the open has gapped above, but in this case, the entire pre-market range is completely above yesterday's RTH session high. Market scenario 3, full gap below, same thing except in reverse. Today's pre-market range PML to PMH gaps completely below yesterday's RTH session low YDL. So again, it's not just that the open is below yesterday's low, but the entire pre-market range of SPX, the PML to PMH, has gapped completely below yesterday's RTH session low. Market scenario 4, top overhang, poke above. Today's pre-market high is above yesterday's RTH session high YDH. Also, today's pre-market low is either above or equal to yesterday's RTH session low, the YDL level. Market scenario 5, bottom overhang, poke below. Today's pre-market low, the PML, is below yesterday's RTH session low, YDL. Also, today's pre-market high is lower than or equal to yesterday's RTH session high, YDH. Market scenario 6 spans both side wide pre-market extreme volatility market scenario. This is a market scenario in which today's pre-market range, the PML to PMH, is entirely outside of yesterday's RTH session range, YDL to YDH, meaning today's pre-market low is lower than yesterday's RTH session low, YDL, and also today's pre-market high, PMH, is higher than yesterday's RTH session high, YDH. This is the most extreme volatility market scenario of all 6. There are several different market scenario display options. The current market scenario is automatically identified by the indicator at 9:30 a.m. Eastern Market Open on either your chart being on the SPX CBOE symbol or the XSP CBOE symbol. You can display the market scenario information on your chart in 3 different ways. One is a table display. The market scenario is listed on the levels table for the PML, PMH, YDH, YDL, and YDC levels table. Secondly, you can display it on a chart label, an optional label displayed on the current candle. Third, you can display the complete full market scenario analysis table. This is a large, comprehensive on-chart table which you can enable, which shows today's current market scenario, a detailed explanation of today's market scenario, typical structural tendencies of the particular market scenario in question, key trading characteristics of the market scenario, and it also displays what to expect during the session based on the typical characteristics and dominant tendencies of the specific market scenario in question. Also, in addition, we provide written reference materials on the 6 market scenarios, and these are one-page PDF cheat sheets that are provided to each user of the indicator for each of the 6 market scenarios, which give you an easy read-through of a one-page cheat sheet that's perfect for printing or viewing on a second monitor for quick reference. Also can be used for studying outside of market hours as well. Okay, so next, SPX v 3.0 expands extensive display options for viewing and analyzing historical key levels and historical market scenarios in previous sessions. So the controls for this are you can use the historical bull bear key price level, historical R levels and S levels, historical midpoint levels, historical pre-market low, PML, pre-market high, PMH, and the historical previous day RTH session high, low, and close, the YDH, YDL, and YDC levels. And lastly, historical market scenario labels. So each historical level type can be individually enabled or disabled for a clean, customized chart visualization of historical sessions, so you can choose to view historical sessions with only those elements you prefer to analyze. So the core benefits of study and analysis of historical key levels and historical market scenarios can provide you with a critical context that transforms your trading from reactive to strategic. By studying the tendencies of how SPX behaved at specific key levels in historical sessions, and also further drilling down to specific market scenarios, you can gain a probabilistic edge for your preferred trading strategies based on historical price behavior rather than just assumptions. So those core benefits including pattern recognition, identifying recurring daily range patterns relative to different key levels such as the BBKPL level, R levels, and S levels that consistently generate strong reactions versus which ones get blown through. Spot behavioral tendencies at specific key levels, whether it's BBKPL, the R levels, the S levels, or the PMH, PML, YDH, YDL, or YDC that appear to repeat session after session or during specific market scenario types. Risk reward validation, verify whether your intended trade setup meets minimum risk reward criteria based on recent behavior. So used historical data and analysis, viewing the historical sessions to validate that your target levels actually are achievable, not just theoretical. So you can avoid bullish or bearish trades from specific key levels where recent history of your analysis of historical sessions shows the market consistently uh, may fail to reach your minimum profit targets for trades taken from the specific key levels in question that you're looking at trading. Narrow key level trade selection criteria determine which levels offer the best probability setups for both scalps and regular trades. Identify which key levels historically produce clean one level moves or greater for scalp only minimum move in your favor, or 1.5 or greater level moves for a regular trade. That's the minimum threshold for that, 1.5 level move in your favor. Overall, or during one or more of the 6 different market scenarios, filter out marginal setups that look good on paper but historically fail. Also helpful in determining what time periods during the session have a tendency through the historical session analysis to offer the best risk reward setups for the key levels you prefer to take bullish or bearish trades from. So the bottom line, historical levels just are not interesting data points. They're a laboratory for validating trade ideas, helping to eliminate low probability setups and focusing on higher probability setups for your preferred trading strategies. By viewing historical session key levels alongside specific market scenarios, you can drill down to discover which market scenarios consistently favor the particular key levels you prefer to take trades from, and which market scenarios are problematic for your preferred strategies, and also what time periods during the session have a tendency to offer the best risk reward setups for your preferred trade strategies and the key levels you prefer to take bullish or bearish trades from. For example, you might discover that your preferred bullish trades work exceptionally well in one or more of the 6 different market scenarios, but consistently fail in other market scenarios. Or you may find that your preferred bearish trades deliver the best results in one specific market scenario, but get stopped out frequently in other specific market scenarios. This edition of market scenario specific historical analysis combined with key levels historical analysis can provide you with an additional edge, such as knowing which days to trade aggressively when your preferred market scenario appears, and which days it may be best just to skip trading altogether, or if still trading, to reduce your position size and overall potential risk when a problematic market scenario is in play for that session. So over time, this can help you build a personalized playbook. As an example, I prefer trading during market scenarios 2, 4, and 6, but should generally avoid market scenarios 1 and 3 based on your analysis and or actual historical performance rather than guesswork. So this level of self-awareness and strategic selectivity can help you avoid forcing trades when a particular market scenario through your historical analysis and study appears to demonstrate generally unfavorable conditions for your preferred trading strategies. Also, a comprehensive PDF features and user guide is included. So we include, with the purchase of the indicator, SPX v3.0 indicator, a detailed, comprehensive user guide and manual on setting up, using, and trading with the SPX v3.0 indicator. Finally, new payment options. In the past, we have only offered one payment for lifetime access options on the SPX Daily Key Levels Indicator. So now the following payment options are available for the SPX v3.0 indicator, starting off with a quarterly 3 months access subscription. So this payment option is for users who prefer the flexibility of a quarter-by-quarter subscription, 3 months at a time, which renews every 3 months unless canceled by user, or an annual subscription, which is 12 months at a time. This again, payment option for users who prefer the flexibility of an annual subscription. Of course, the annual subscription is going to be less money by paying 1 year at a time versus just paying quarter by quarter. And the annual subscription would renew every 12 months unless canceled by user. And then finally, the one payment for lifetime access. This payment option provides the best value for users who prefer to make one payment and then have lifetime access to the indicator with no additional payments. And of course, the lifetime access one payment for that is going to be a lot less than either just paying every quarter or having to pay annually. Okay, so now we'll begin the rest of the video, which will now go to the charts and show you the different features that have been added to the SPX v3.0 daily key levels indicator. Okay, so first off, this indicator now works on 3 SPX symbols. So as you know, the SPX v2.0 version worked on the SPX CBOE, which is the official SPX main index, and it also worked on the SPX 500 8 cap, which is a Forex CFD. So many people have asked us to make the indicator work on the XSP CBOE symbol, which is the mini SPX index, which trades at 1/10 the value of the main SPX index. And the reason for that is that it trades just like SPX, except it's 1/10 the value. And the XSP mini index also has options that you can trade, and those options are 1/10 the value of regular SPX options. So a lot of people, instead of trading one SPX option, would either like to trade 10 of the SSP options to give them some scaling out options for having multiple contracts, or if they don't want to do that, they would just prefer to have something that's similar to trading SPY, which that is the case with XSP, because it does trade at 1/10 of the value of SPX. So the options are going to be more in line with SPY options, except that XSP options are still SPX based options, and they offer a few advantages over that. I'm not going to go into those at this time. You can simply go to ChatGPT or some other AI source, or just look up on an internet search on Google as what are XSP SPX mini index options, and what are some of the advantages over trading XSP options over SPY options. So you can look that up on your own. So we'll go ahead and just show you right now. We'll put it on XSP. So you just type in XSP, S&P 500 Mini SPX Options Index under the CBOE. And as you can see, now we have the XSP bull bear key price level. We have all the other levels for XSP, including this table here and this table here. For right now, we'll just go back to the regular SPX chart. Okay, so now we're going to go into some of the other additions. That was kind of a minor addition that we added, and now we'll go into the more substantial new features. Okay, so one of the main new features that we've added in SPX v3.0 is that we've introduced a daily automated market scenario analysis feature. So every trading day, the SPX Open can be classified into one of 6 structural setups based on the relationship between these 4 key levels: the PMH, the pre-market high, the PML, the pre-market low, the YDH level, which is yesterday's daily high, specifically the previous RTH session's high, and the YDL level, yesterday's daily low, which is the previous RTH session low. Now, understanding which market scenario you're trading in the current session can provide a critical edge that separates systematic traders from those relying on guesswork. So here's some of the specific advantages that each element gives you. One is immediate direction bias. Once you know which one of the 6 specific market scenario structures that you're in for this current session, you can know whether the specific market scenario that we're in favors bullish or bearish setups, and avoid fighting against the dominant market scenario structural tendency. And you can focus your attention on high probability trade directions instead of trying to trade both sides. Also, predefine key levels for the session. Each market scenario of the 6 different market scenarios identifies which levels, the PMH, PML, YDH, or YDL, will act as the strongest support and resistance as a common tendency in that scenario. Knowing in advance which of those levels are the most likely to be tested, defended, or broken, you can position your entries and exits around levels with the highest probability of generating reactions. Expected volatility and range. For example, market scenario 1 inside yesterday's range signals lower volatility, mean reverting conditions. Market scenario 6, high volatility, wide pre-market range, warns of high volatility and whipsaw risk. And you can adjust your position sizing, stop losses, and profit targets based on the expected high volatility profile. Gap behavior probabilities. Market scenarios 2 and 3 are gap scenarios, with market scenario 2 the full gap up scenario and market scenario 3 full gap down scenario. And it tells you whether gap fills are likely or if continuation is the dominant tendency of that particular market scenario structure. Understanding when to trade a gap fill setups versus when to fade them and expected continued momentum. Know which side of yesterday's range acts as a magnet, YDH in gap up scenarios, YDL in gap down scenarios. Trade gap fills with confidence or avoid them when the dominant market structure says continuation is more probable. Traps and reversal zones. Know when false breakouts are likely. Market scenario 4, short traps above YDH. Identify when failed breakdowns can trigger sharp rallies. Market scenario 5, bear traps below YDL. Avoid getting caught in structural traps that can wipe out retail traders. Time-based expectations. Understand when the market is likely to consolidate versus trend. Know whether to expect early direction or late session breakouts, so you can manage your time more effectively by knowing when the highest probability setups will occur in the particular market scenario that we're in for today's session. Risk management. For example, wide pre-market ranges in market scenario 6 require larger stops and smaller position sizes. Tight, choppy inside ranging scenarios such as scenario 1 allow for tighter risk management. Adjust your risk parameters to match the structural reality and tendencies of the market scenario currently in effect for this session. Systematic consistency. Remove emotional decision making by following market scenario structural dominant tendencies. Build a repeatable process based on objective market structure rather than subjective interpretation. Track which market scenarios you trade your best in and which you trade your worst in, and refine your edge over time. Now there are several different market scenario display options with this indicator. The market scenarios will display when you're either on the SPX CBOE index symbol or the XSP mini SPX index symbol. And there are several options for displaying the information and also for the amount of information you would like to see about the particular market scenario. As you can see here in the table for the PMH, PML, YDH, YDO, and YDC levels, we have the market scenario that we're in for today here in one of the top sections of this particular table. So that gives you an easy reference there if all you're looking to see is what market scenario that we're in for this session. However, if you'd like more detailed information regarding the particular market scenario, you can simply go into the user control panel, scroll down to the bottom, and you'll see this market scenario table section. Here's an important note and risk disclaimer before enabling the market scenario table, which you should read. And we click on Show Market Scenario Table. And as you can see here, we can change the market table position on the chart as well as the table text size. The default size is going to be small and the default position is going to be the bottom left. And as you can see here, we have the market scenario analysis table, session analysis for today's session with the date, market scenario 6, high volatility, wide PM range, which is wide pre-market range. We have the levels here. For those of you wondering why the levels don't show up with the same individual colors here, that is because that is a limitation in Pine script coding for tables that you cannot automatically have a flow through of whatever the levels are here in colors to here. They have to be one color in a section on the table. Then we have an explanation of today's market scenario, tendencies, what to expect, and also an explanation of the tendencies and market characteristics of the market scenario. Now, you can go ahead if this is too small for you, and you can change it to normal, which will make it a little bit easier to read. And so as you can see here, now it's a little bit easier to read. There's also an important note down here. These tendencies are probabilistic, not deterministic. Always confirm with price action volume and broader market context. News, economic releases, and overall market sentiment can override structural tendencies. The information provided regarding the market scenarios is provided for educational reference and informational purposes only. It should not be used as the sole basis for any trading decision. Always conduct your due diligence and consider your risk tolerance when making trading decisions. Okay, so because of the amount of information here that is presented, it does, if you have it on a normal setting, normal size setting, it does take up quite a bit of screen size. So as I said, you have the ability to just make it small, and that is the default. However, we also have come up with some market scenario cheat sheets, which we'll go ahead and show you now. We'll just go ahead and reset these to default. So you will receive a Google Drive link to this document. So this document you may want to, as it says here, when you open this on your PDF reader, you may want to change the zoom view percentage to 125% or 150% when you're reading for easier reading and viewing on the market scenario cheat sheets themselves. For this first page, not really needed as much to expand the zoom. However, when you get into those, you will see. Okay, so now we'll just run through these 6 market scenarios here. Market scenario 1, inside yesterday's range. Explanation, today's pre-market range. PML to PMH is entirely contained within yesterday's RTH session range. This is just giving you a brief description of each, and then we'll get into the cheat sheets, which give you all the full information. Market scenario 2 is a full gap above today's pre-market range. The entire pre-market low to pre-market high range gaps completely above the RTH session high YDH level. So this is a full gap above, or even the pre-market low, not the open. So you have gaps where you just have the open that is opening and gapping above yesterday's close. However, this is a true full gap above where the entire pre-market low to pre-market high range is that entire range is completely above yesterday's RTH session high. The same thing in reverse for market scenario 3, full gap below. The entire pre-market range of PML to PMH is completely below yesterday's RTH session low, not just the open. Market scenario 4, top overhang poke above. Today's pre-market high is above yesterday's RTH session high YDH. Also, today's pre-market low is either above or equal to yesterday's RTH session low. Market scenario 5, bottom overhang poke below. Today's pre-market low, the PML, is below yesterday's RTH session low YDL. Also, today's pre-market high, the PMH, is lower or equal to yesterday's RTH session high, the YDH. And finally, market scenario 6 spans both sides wide PM. This is the highest volatility scenario of all the scenarios. Today's pre-market range, the PML to PMH, is entirely outside of yesterday's RTH session range, YDL to YDH. So that means, as an example, if we go back to today's session, which happens to be this market scenario, you will see here that the PMH is above the YDH and the PML is below the YDL. So the entire range of PMH to PML is outside yesterday's high and low of the RTH session. Okay, so there's the important known risk disclaimer again. Now we will put this to 125. Like I said, on the cover page, you might want to go to 125 or 150 or something at 125 or above. All right, so here's your cheat sheets here. First, I'll zoom out just so you can see basically the structure of it. So each one of these is structured similarly to this. So the idea here is that you can download these, you can print them out, you can become very familiar with them, and you can have them as an easy reference either on a separate screen if you have a multiple monitor setup. You could have this on the screen as it might be easier for you to read and follow versus the on-screen on chart one, which, as we know, now we have this on chart because not everyone has 2 screens and not everyone, some people may be traveling and maybe they don't have the link bookmarked, or they don't want to they don't want to look at it on a separate screen on a bookmark, or for whatever reason they just need to access this information on the chart. So you can do that by simply showing the market scenario table as we showed you earlier, and you can adjust the size of that. Now this is what it shows like on the small, and you can make it larger. You can also change the colors, background color, text color, and the opacity of all those as well. Let's go back to the cheat sheets now. All right, so we'll just run through these so you can see the overall look and feel of them. So here we have the full gap above, full gap below, top overhang poke above, bottom overhang poke below, spans both sides wide pre-market. Keep in mind, if you're going to print these out, these are on 8.5 by 14, so they're legal size, so just keep that in mind if you're going to be printing them out. There's just simply not enough room on 8.5 by 11 to fit all this information in on all of these, so they're just on one sheet. Some of them are a little less than others, like these here and this first one. However, we wanted to make it more uniform. Okay, now we'll just look as an example at one of them. Since you'll be getting these, you can look at all of them on your own. Okay, so market scenario 1, inside yesterday's range, explanation, visual structure, gives you a visual structure of the explanation. Primary tendencies, key trading characteristics with bullet points, what to expect, and then finally the note and risk disclaimer. And basically, a lot of these follow the same structure. Visual explanation, visual structure, tendency, key trading characteristics. In this case, key level priority with this particular market scenario is an expanded session here. Additional characteristics and some additional tips here. We'll go back to this one here. Here you have a shortened version on key levels. So key levels for this is, on some of these, is going to be brief, and some of them will be a little more expanded. Same thing here with this one, full gap below, top overhang poke below, bottom overhang poke below, and finally market scenario 6. Okay, so just keep in mind that the market scenarios deal with those 4 levels: PML, PMH, YDH, and YDL. Now we're going to show the other methods that you have for this, showing the market scenarios. You also can show the market scenario via a market scenario label. So if you turn that on, let's say as an example you didn't have this here, you prefer to have your chart with this off for some reason. Then you can turn on the current market scenario label and it will show you a label on the current candle, which you can change the size and also the text color and the background color of that label. Also, there are historical scenario labels. We'll get into that when we go more into the expanded historical levels that have been added, including these historical scenario labels. But just keep that in mind from now, that now when you're looking back on historical sessions and looking at other levels in historical sessions, that you also have historical market scenario labels, so you can go back and look at each session, and you'll know what market scenario that session was. Okay, the next feature that we've added is an advanced alert system. So this is a comprehensive alerts section that's been added to the user control panel that offers very granular control over which levels trigger notifications, of which you're in total control, and selecting which alerts that you would like to receive on your chart, displayed on your chart for the particular level. Okay, starting off here, we have this alert, which is for one candle only, the 9:30 a.m. opening candle close BBKPL level alert. So as an example, we'll turn that on for today. One thing you want to keep in mind with these alerts is that all of these alerts are going to show only for the current session. And the reason for that is that TradingView PineScript has a coding limitation which limits the amount of objects, labels, etc. that could be on a chart simultaneously. So if you were showing historical alerts, there would simply just be way too many alerts, and it just becomes kind of unusual because it can only go back a couple of days, which really doesn't help very much. And it also interfered with some of the other functions that we have in this code because of that native TradingView coding limitation. So just so you know, when you're using these alerts, they're only going to be for the current trading session. So don't expect to see alerts from past sessions if you happen to look back in the past. You also see that we have apply range filter. So we have an acceptable range percentage. Now, you've seen our SPX session videos where we've talked about inside the acceptable, within the acceptable range, and outside the acceptable range. So this acceptable range alert, which is an optional alert, however, it's typically best to apply the range filter, the acceptable range percentage filter. On your alerts, that's completely up to you, but we would certainly recommend that you use it. The the maximum that you should normally set this to, and this is what it's set to, is 85%. Now, in practice and for your own purposes, you may want to set this at a lower amount. You can set it even at a higher amount if you would like. However, we don't recommend that. But that is up to you. But you may find that you prefer to define your acceptable range percentage as a lower amount. And that is fine as well. So every trader is different, and it just really, this is the max that it should be. And you may find that you prefer or you get better results limiting it to a smaller percentage. Every trader has a different process, different levels that they're trading, etc. So different strategies, different ways of conducting even the same strategy. So it's best through trial and practice to decide what is the best percentage for your trading purposes. Okay, so this particular alert is only for the 9:30 a.m. candle. So whatever chart time frame you have your chart set to is going to be that first candle. So if you have it set to a 5-minute chart, it's going to be the first 5-minute candle, the first 5-minute opening candle at 9:30. So the 5-minute chart, that's going to be the 9:30 to 9:35 a.m. candle. If you have it on a 1-minute chart, that's going to be the 9:30 to 9:31 a.m. candle. If you have it on a 2-minute chart, that's going to be the 9:30 to 9:32 a.m. opening candle. 3-minute chart would be 9:30 to 9:33 a.m., etc., etc. If you have it on a 10-minute chart, it's going to be the 9:30 a.m. to 9:40 a.m. candle. So it's all dependent on it's only going to alert or it's not going to alert based on the opening candle for the chart time frame, the time frame you have your chart set to. So as an example, if we leave it on the default at 85%, and we have this alert turned on with the range filter, which for the opening candle, you should be using the range filter on that. As you can see, apply range filter is optional on each one of these alerts. Now, the reason for that is, especially on these other alerts, is you may want to see an alert on R3 for taking a profit on a bullish trade from R1. And you don't really care about how far above it may close above R3. You just want to know that it closed above R3. So you may not want to apply the range filter in that type of instance for that particular purpose. However, for trade entries, that's a whole different story. When you want to see an alert because the purpose of that alert is to alert you to a possible trade entry, then I would suggest that you use the acceptable range percentage filter. But that's why they're optional, because they can be used for different purposes, and the primary purpose of the range filter is predominantly for trade entries. If you have it off, then it can serve a different purpose, like we'd said, for one purpose. One alternative purpose may be just to notify you that it closed above a certain level or closed below a certain level if you had a bearish trade, and that's your trigger to alert you to get out of your trade and take your profit, as an example. Okay, so here we have the alert here, and as you can see, there is no alert even though it's turned on, and that's because this candle is greater than 85%. Now, what is the 85%? What that means is that if this is turned on to 85%, the closing price of this opening candle, the close has to be 85% or less than the distance between the BBKPL and R1, or the BBKPL and S1 on a close below. So this is a candle close above or below alert. The other alerts are separated, and you can individually turn on crossed and closed above alerts for specific levels and crossed and closed below alerts. This is the only alert that is a dual alert, closed above or closed below. So as an example, let's say, and this would be your, as we've talked about in the welcome letter, and you may have looked at the PDF document, and this was also pointed out in the welcome letter, and we also have a video and a PDF document on it of 9:30 a.m. candles to avoid based on the acceptable range. So this is a perfect example. So if you were looking to get into this trade, you would have known that this closed higher than 85%, so this should be avoided as a trade to take off the BBKPL level. Now you can reassess after that with succeeding candles to see if there's a trade opportunity on another level, but this will keep you out of candles that are far too risky to take a opening candle trade off of the BBKPL, whether it's a bullish trade on the close above or a bearish trade on the close below. Like I said, the maximum is 85%. And one of the reasons you have to think about is that when you're taking a trade off the BBKPL level, your tight, if it was a bullish trade, your tight stop loss is the QL below, and your standard stop loss is the first midpoint below. And then you have to think of the reward. The reward on a scalp is just going to be hitting the R1 level, and on a regular trade, it would be the 1.5 minimum level threshold, which would be from the BBKPL level, mid R1, R2. So this candle is so far away from the stop losses that this is simply too much risk versus the possible reward on this trade. So the closer this candle closes while still being above the BBKPL, the less risk there's going to be technically as far as points between the stop losses that you would use, one of these stop losses, and the reward. However, like I said, that doesn't mean that, let's say, instead of it selling off like it did here, that if it started closing above R1 in succeeding candles, then you could consider a trade, a bullish trade off of R1 if price action was giving us a bullish trade setup off of R1. Or the reverse, if we have a bearish trade setup off of R1, then we can consider an R1 bearish trade for a move back down to these levels down here. But let's go ahead and we'll turn on the alert, and we'll put it at a higher level just so you can see what the label looks like. So we'll go to 95%, see if that works. Or let's just go all the way up to 98%. And as you can see here, now we have this alert label here, which is alerting you to the fact that it did close at 98% or less. Now we could step this down and see where it did, what percentage it was. Okay, it looks like it cut off there. We'll go back to 92, 93. Okay, 93. So as you can see here, oftentimes this is the case, that if you have an overextended close above on the opening candle, you oftentimes get a reversal, such as we had today. Now, as I said, you can make this lower. You could make it, as an example, if you wanted to go with, you don't want to enter anything that is above the midpoint, well, then you could change this to 50, and 50% would be the midpoint here or the midpoint here. Remember, this is a dual close above or close below alert, so it's going to alert you either way if the close above or the close below is at or within the acceptable range percentage. So if it was set to 50, that means it's got to close within 50% or less, close below or close above 50% or less to actually show on the screen. And you can change the size of the label. You can also change the color schemes of the labels. So there we've changed it to normal. Small is the default. Let's go ahead and reset this back to what it was. Okay, so now we'll go through the other sections. So we have that one, we've already went over that. Now we have crossed and closed above alerts. So with this, it is not enabled by default. So we'll go ahead and set everything back to the default. So as you can see here, by default, this is not enabled either. However, the range filter is enabled because with this particular alert, you need to use the range filter if you're going to turn it on. So that's why this is already checked by default. So you have to remember that you do have to enable the alerts. So this is a master switch for the alert, and then you would also need to turn on this one here. This is a master switch for crossed and closed above alerts. So if you want to do any crossed and closed above alert, even if it's just one level, you have to turn on the master switch. Then you can select which particular level that you want a crossed and closed above alert on, and whether you want to apply the range filter or not. Now, one additional note, the acceptable range percentage, whatever it's set to, just to re-clarify this, the acceptable range percentage is based on one base level, the percentage of one base level. What do I mean by one base level? One base level is the amount of distance in the current session between the bull bear KPL in R1 or the bull bear KPL in S1, which is the same amount of distance. It's just one is above and one is below. But as you can see, they both have the same amount of distance. So this is the amount of the percentage. So the point I'm trying to make is that when you get past R2 or you get below S2, the levels become a lot more spaced out. So just so you understand, the 85% is still going to be 85% of this base level. It's not going to be 85% of S2 to S3 or R2 to R3. And the reason for that is there's so much space between these levels that if you did the same percentage up here and made it the percentage of this distance, then it would be way too far out. The 85% works across as a max, or setting it to less than 85% works across all of the different levels in the same way. So if it was an 85% of this, then that same distance is going to apply here. So let's say 85%, this is 50%, this is about 75. So 85 would be about right here. That amount of distance is going to be the same amount of distance here. If it was a cross and close above alert, or let's say it was a cross and close below alert on R3, it would be the same thing about right here. It's not going to be 85% down to here. Because again, that's too far of a distance between the stop losses you would have for this R3 bearish play or this R2 bullish play if we were using 85% of above of the distance between these levels. So I just want to clarify that for you. So when you're using it, you'll know that that's what to expect. All right. So as you can see here, there are for all the different levels. They're only for the main key levels. They're not for midpoint levels or QL levels. They're for the BBKPL, the main R1 through R6 levels, the main S1 through S6 levels, the PMH, the PML, the YDH, YDL, and YDC levels. And you can individually select which ones that you want to enable. And you can also select to enable cross and close above and cross and close below. Again, the only alert that's a dual alert based on enabling it singly is the 9:30 a.m. opening candle alert. Okay, so that's going to lead into our next topic on the other additional, one of the other additional features that we've added. Okay, one thing I do want to point out with the V3.0 indicator that is different than the V2.0 that you need to know about is the V2.0 had 10 levels above R1 through R10 and 10 levels below S1 through S10. The V3.0 indicator has 6 levels above R1 through R6 and 6 levels below S1 through S6. The reason for that in this particular version of the indicator is because there is so much more coding in this indicator than the previous indicator that we ran into a coding character and line limit on TradingView, which you cannot exceed or at which the indicator can become unstable. So we had to make a decision as to what were some things that could be deleted, and one of those was all of the coding of different display aspects that had to do with levels 7 through 10 above and levels 7 through 10 below, including the midpoint levels, including the quarter levels, etc., and then also some of the other associated coding that's integrated with other aspects of the indicator as well. So our recommendation for that is that you have both indicators, so you're still going to have the V2.0 indicator. And if we encounter a period in the market or a session in the market where we start exceeding R6 or S6, which doesn't happen that often, there are periods of time where we do have extended periods where that can happen, such as the COVID pandemic or other market meltdowns that we've had in the past where we've had extended extreme volatility, or you may get a one-off session every now and then due to world events or other news-driven events where you have sessions that may exceed R6 above or S6 below. Then just go ahead and put your V2.0 indicator on the chart, and then you'll be able to use R7 through R10 and S7 through S10. Now, one of the other things that we had to take out of the V3.0 indicator, which is still in the V2.0, is zone shading. Most people, at least from the feedback that we got, did not feel that zone shading was something that they used very much. So we made that was part of the decision of things that we had to eliminate from the code in order to make room for all of the other new features so that the indicator could be completely stable and not be anywhere near the coding character line limit for TradingView PineScript. So if you prefer to use zone shading, that's not going to be in the V3.0 indicator, so I just want to make you aware of that. So if you like to use zone shading, then you can still use the V2.0 indicator for utilizing zone shading. Okay, so now we'll go on to the other one of the other new substantial features, and that is going to be stop loss and take profit levels for the PMH, PML, YDH, YDL, and YDC key levels. So as you can see here, we do have a section called stop loss and take profit levels for PML, PMH, YDL, YDH, and YDC. Now again, we'll go back and set this to the defaults. As you can see here, Enable stop loss and take profit levels for these levels is already enabled. However, even though this is enabled, this is a master switch, and you still have to enable the specific levels and type of trades that you want to do, either bullish or bearish. So this is a new trading toolkit for users who desire to take directional trades off of any of the PMH, PML, YDH, YDL, and YDC key levels. So this plays into the market scenario analysis aspect, which the YDH, YDL, PMH, and PML are a part of that, of the market structure for the market scenario analysis. The YDC level does not figure into the market scenario analysis. However, the YDC is still an important level to be aware of and is a tradable level as well. Now, you may find that you prefer actually taking bullish or bearish trades off of any one or a couple of the different levels, the PML, PMH, YDL, YDH, and YDC levels. You may also find that you prefer that over taking trades off the regular main key levels, the bull bear key price level, and the main R levels and S levels. Or you may find that you like to do both. So this gives you the flexibility now to take trades off of these levels as well with predefined stops, both standard stop loss and tight stop loss, and also set your risk to reward ratio for your take profit. And you can do that individually for each different level as well as enable them for each different level separately. You could just enable one, or you can enable multiple ones, and you could separate them by bullish and bearish. So we'll just kind of scroll through this here to begin with. Here we have the master switch as we talked about. These are the stop loss TP line extension options. The default is both, meaning both directions. You can change that if you prefer. Here's the line label offset. This moves it either more, the line label either more to the right if it is a greater positive number, or more to the left if it is a lesser positive number, or a zero number, or a negative number. And that works just like the line label offset for all the other line labels for the other levels. And finally, we have the line label text size set to normal. You can, of course, change it to tiny, small, large, or huge like you can the other line labels. So as an example, we'll look at today, and let's just look at PMH as an example. So we'll go ahead and go back to the user control panel. And here we have the PMH level here. We have a close below the PMH. And you can set these up in advance. You don't have to wait for a close below or a close above. You can just go ahead and turn them on and wait to see if price action happens to pan out for your particular trade, and then take action after that. Or you can wait till it actually happens and then do it. That choice is up to you. Okay, so as an example, let's just say here we have a bearish entry. So this is the bullish entry section. So we would scroll past that, and now we go to the bearish entry section. We go to enable bearish entry stop loss. And here, as you can see here, here's the standard stop loss for a bearish trade off of the PMH level. Now, if I change this to a tight stop loss, it's going to create the tighter stop loss, and it's signified by TISL. And as you can see here, it also signifies what type of stop loss it is. For bear, for a bearish trade, TI stands for tight, SL for stop loss, PMH for the level it's on, and then there's the level price. We'll change it back to standard. So as you can see, you can change the line color if you prefer to make the line color different. You can also change the line width and the line style. So these are the defaults on that. Below that, you would set the bearish entry take profit. Now this is the risk reward to risk multiplier. It is currently set to 2. That means $2 of reward for every dollar of risk. So what that means is the distance between the PMH and the target is twice the amount between the distance between the PMH and the stop loss you selected. So as an example, if I change this back to tight stop loss, then it's going to change the stop loss amount, and it's consequently going to change the take profit. Now the take profit is twice the amount of the tight stop loss. So the default is 2 on the reward risk multiplier. You can set it anywhere from 0.25, which would be a very small scalp. So we'll see how that pans out here. As you can see, that's an extremely small scalp amount. So 0.25 means that it's only going to be a quarter of the distance of the stop loss. So that's going to be only 1/4 of the distance of the stop loss that you've chosen. That 0.5 would be half. These are in 0.25 increments. 0.75 would be 3/4. 1 would be equidistant to the amount of the stop loss. 1.25, 1.5, 1.752, and it goes up in 0.5 increments all the way up to 10. So let's just put it on the max of 10 here. Okay, as you can see here, I've done a few display changes here to make this easier to see. So I've gotten rid of the CBOE table up here, and I've moved since we're at the end of the session now, I've moved all the line labels more over to the left, so it's just easier to see this earlier price action and how the bear play on the PMH level, and as far as the stop loss and take profit levels. I've also changed the line width to 2 to make those a little more prominent as far as the dotted line. And I've also gone ahead and, as I said, moved these over to the left, 165. So we've moved it over 165 bars to the left of ending price action to where they're back here in the earlier part of the session. And also made the line labels large, so it's just easier for you to see for this video. So you may prefer on your own chart just to leave them at normal or small, but just thought it'd be easier for this video. Okay, so as you can see here, I'll go back down to the settings here for the bearish PMH. We've set the risk to reward multiplier, reward to risk multiplier to 8. So that's going to be 8 times the tight stop loss. As you can see here, if you had this close here on this candle, there was no hit of the tight stop loss. Obviously, if you had a standard stop loss, there would be no hit on that either. And this is a reward risk 8. So this is also on the target. You'll have the whatever you have it set to. You'll see here, just to remind you. And that's so you just have a reminder of what it is. If you wanted to set it to something different, let's say as an example, you wanted to make it even bigger. Now it's 8.25. 8.5. 8.75. 9. So as you see here, we're getting close to the YDC level. So right at about 9.5, we're going to be at the right on top of the YDC level. So that is with a tight stop loss. Remember, this is 9.5 times the risk on the tight stop loss. Now, if we go all the way up to 10, then we'll be almost at YDL. Now, remember, this is 10 based on the tight stop loss. Now, if we change it to standard, let's just make this as an example 5. We'll change this to standard. And as you can see here, that's basically the same as tight stop loss with 10. But the idea here is that if you were targeting, let's say YDC or YDL or PML, then you might want to just go ahead and just ratchet this up. And let's say 5.5, where do we get at PML? Is basically 5.5 based on a standard stop loss. Now, if we want to see how far it went down to the bottom here, at 7, seven and a half. So remember, 7.5 on a standard stop loss on a reward to risk is going to be the same as 15 on a tight stop loss. Now we have this capped at 10. We may introduce an update later on where it can go higher than 10. For those that prefer to use a tight stop loss. So we may do that later on this year. But for right now, the cap on the risk to reward multiplier is 10. But as you can see here right now, you can change that by, if you use a standard stop loss, and if you went all the way, say, to 10, that's going to be the equivalent of a tight stop loss with 20. And we'll just take a look at where that ended up, just below S3. So that gives you an idea of the range. Okay, so as I said, these are available for individual levels. So they're separated by bullish and bearish. Remember that this is the master switch. It's already checked by default. However, just because the master switch is on doesn't mean any of these are going to show. So you have to individually look at which ones you want to turn on. Each one is the stop loss followed by the take profit for that level. So here's PML stop loss for a bullish entry followed by bullish entry take profit for PML. And the same thing for each level. Then when you go into the bearish section, same thing. Okay, now we're going to look at another new feature in the historical section. We're going to switch over to a different chart. So to use historical, some of you may have already watched the video on how to do historical sessions. as far as setting up your chart correctly to do them. But I will just run through it again since we have new historical levels and also those market scenario labels. So the best way to do it is you go into your user control panel, and this is more for studying historical sessions to try to get an additional edge to studying the relationship between levels and price extensions that happened in previous sessions and what kind of opportunities and range typically that you'll see on a typical day with SPX, and then now with the new levels and market scenarios that we have, there's additional context for studying historical sessions that's very valuable. Okay, so the first thing that you want to do for historical when you're trying to look at historical sessions, regardless of which levels you're trying to look at, just go ahead and change all of these display settings as far as line options to write only, where they have a drop-down menu where you can make a choice. The reason for that is when you're looking at historical sessions, it needs to be on write only. Otherwise, you're going to have too many lines going to the left and right, because then it's going to bundle up all of the previous sessions as well, and it's just going to look very confusing. So the first thing you do is you change these to write only. And for this, we'll go ahead and just change this to a 5-minute chart for the purposes of these historical sessions. Now, the additional historical levels that we've added are going to be historical midpoint levels. So in V2.0, we had historical BBKPL and historical RNS lines. Now we've added historical midpoint lines as well as historical PML PMH, as well as historical YDH, YDL, and YDC. And then we also have historical market scenario labels. Okay, so the next thing you want to do is you want to turn off these tables so they're not in the way. So turn off when you're on SPX. It only displays the SPX chart, not the ACAP chart. There's only multiple charts on a table if you're on the ACAP SPX 500 symbol. So we're just going to assume that most of you are doing this on either XSP or SPX for purposes of this video. So just uncheck the CBOE SPX price level table as well as the PMH PML table. We don't have historical QL levels, but just to get these off of here, just turn off the QL levels in the QL levels section. Next, what you should do for the midpoint lines is go ahead and change those to a different color. Right now, as the default, they're the same color as R1 and S1, at least these two lines here are. And if you want to look at only these, the historical lines are going to show up for which ones are enabled in the user control panel. So if you only have these two midpoints showed up enabled, then those are the ones that are going to be enabled. Or if you want to choose different ones, enable and uncheck these. Whichever ones are enabled are the ones that are going to show up in historical as well. So we'll go up here and we'll change these to white as an example to make them easier to discern. The bull bear key price level, let's change that to make it thicker. Now, if there's other important levels that you'd like to highlight, I would suggest that you either change the color or change the line width or change the line style of the particular ones that you may want to highlight to make it easier to discern which ones that they are. Like, let's say instead of having R2 and R3 both be red, you could make a different color, or you could change the line style on R3 and the line width just to make it easier to differentiate between R2 and R3. That's just the way that I do it. For me, it's just easier for me to discern. If I do that, it may not be of any consequence to you. It may not be something that you find is necessary, but it's just a tip if you would like to have a different visual representation than historical. As you'll see here in a second when we see the historical setup. Okay, so we'll go ahead and we will, let's as an example too, let's make the PMH and PML lines different. So we'll go down here and we'll start off with just the PMH and PML. So we're going to turn off. Now you can leave all the lines on if you want. I'm just showing you some different variations here of what you can do for historical. So as an example, we'll just go ahead and uncheck the YDH. Now let's go ahead and keep them on as an example. Let's just go ahead and we'll make the PMH and PML levels, we'll just go ahead and make them dashed. And we'll make it like 3. Okay. So now we'll enable historical PML, PMH, historical YDH, YDL, and YDC, historical midpoint, RNS, historical BBKPL. And we will also turn on the historical market scenario labels. Now to get rid of these blue dots, in case you don't already know this, you go into a blank, or in this case a black part of the screen, and you simply left click and they go away. Okay, again, as I said before, you can change the color and text of these market scenario labels if you prefer something different. But here, as you can see, you have the market scenario labels for each session. And you're going to have the, oh, I forgot to show you one thing before we do this. I forgot to change the PML and PMH levels to be right only. The YDH, YDC, YDL levels are all right only by design, so there is no drop-down menu for that. However, the pre-market high and pre-market low, you need to change that to right only. That's why you have this one running across the entire screen. Okay. All right, my apologies for that. Okay, so here we have the different scenarios. Now also, like I said, if you want, you could turn off 4, 5, and 6, or 5 and 6. Let's do that as an example. We'll turn off 5 and 6. So remember, this is on a 5-minute chart. If you have it on a longer chart, such as 10 minutes, then you're going to be able to see more sessions in a compressed space. However, these labels will kind of bleed over on the longer time frames, because the longer time frame will take up less horizontal space per session because there's less candles per session. But if we go out to a 1-minute chart, then as you can see, you're pretty much going to look at, now this is a 27-inch screen that I'm on. You know, basically 1 to 1.5 sessions on a 1-minute chart. 2-minute chart, you can basically look at 2 full sessions at a time, at least on this screen size. And as you can see here, here's the midpoint levels, BBKPL. This is the R1, the blue, S1. As you can see here, the pre-market low is very close to S1. As you can see here, like instead of having all these be solid lines, you may prefer they all be solid lines. I happen to prefer for them to be different colors and a couple of different line styles, so in line width, so it's kind of easier to instantly tell what was what. And like I said, you could make some of these levels up here, like you could make the R2 level or the R3 level or the mid R2, R3 level or whatever. If you want to see certain particular levels more prominently, then you can change the line width, line style, line color to make it easier for you to see or differentiate that particular level when you're looking at historical versus the other ones. So that's just up to you. So again, that 2-minute chart, 5-minute chart, you probably see about 3. So as an example, 3 days here. So like I said, the more you move up in, remember the max on this indicator is 30 minutes. That's going to be the max time frame you can look at on this indicator, whether it's historical or regular. It does not work on chart time frames of longer than 30 minutes. But when you go to 30 minutes, there's only a few candles per session. So there's only basically 13 candles in a 30-minute session. But, depending on what you're trying to delineate from doing the historical analysis. Okay, so let me go back to a 5-minute chart and then we'll talk more about this. Okay, so how do you use the historical levels? So historical midpoint levels you could use, it just depends on what context you're trying to view the historical sessions on. So one general overall view is if you have the historical market scenarios turned on, then you can get a good idea of what happens on a given market scenario one day. You can go back and find what kind of volatility did we have, how many times on market scenario one do we actually have a breakout day such as we did here, and what levels were in play on those particular days, given that the natural predominant tendency of that particular market scenario is compressed volatility. That doesn't mean that 100% of the sessions are going to be compressed volatility. That you can either have news events, or that's just the predominant overall characteristic of market scenario one inside yesterday's range, is that the predominant characteristic, one of the predominant characteristics or tendencies of it is that you will have lower volatility, more compressed range days, typically, unless it breaks out of a particular range. So what you mean by that is PML to PMH range or YDL to YDH range, primarily the PMH to PML range. So a lot of times on market scenario 1 sessions, you'll see just a lot of chop between PML and PMH with the little dips below and above, but those are going to be sessions that typically are going to be less volatility. However, when they do break out, they can break out in a big way. It's just that what we're looking for is in market scenarios is what are the predominant tendencies and then what you're looking for as far as abnormalities in those tendencies to be uh, either breakouts in the case of the lower volatility inside yesterday's range market scenario 1. Okay, another thing is seeing what the ranges are from the bull bear KPL level to what kind of level ranges it's having. Also, to get an idea of where the reversal points of extensions are. So, for example, is SPX normally reversing after being on R1 or R2 or mid R1, R2 or R3 on a particular market scenario setup, market structure, or overall in general, regardless of market structure, is that the extent of moves up and what is the extent of moves down in recent sessions before stalling or reversing back in the opposite direction. That can give you ideas for taking trades off of other levels. Remember, with this indicator, as we pointed out many times in all of our SPX session videos, this indicator is not just for taking trades off the bull bear key price level. It's taking bullish and bearish trades off of any of the main key levels based on the bullish or bearish setups being presented by price action within the session. It's just at the beginning of most sessions, 90% or more of sessions, the bull bear key price level is the one that's in play 90+% of the time and the opening moments of a session. But as we pointed out many times, and then also the certain parts of the welcome letter, you know, there's lots of traders who just prefer to not even trade the first part of the session. They want to trade the 9:30 a.m. candle. They want to trade the opening range. They just want to wait till price hits a specific level for a specific trade setup, either bullish or bearish off that level, and then execute that level. So they're more than happy just to have one trade a day or wait for a specific trade to happen, whether there's no trades that day and maybe they're just waiting for the next day for that trade to happen, trade setup to happen off of a specific level, whether that level is one of the S levels, one of the R levels, or one of the PMH, PML, YDH, YDC, or YDL levels, and just execute those trades and not trying to take every trade on every level. There's other traders that like to take every trade off every level. Everyone's different, so it just, that's part of the process that we also point out in our welcome letter of going through a process of 25 to 35 practice sessions at a minimum on a demo account with this indicator or any of our indicators. And it doesn't matter whether it's our indicators or you paid for another indicator from another company or you're using a free indicator or an open source indicator. It takes time and practice to trade with an indicator to get to where you have the process down of trading with it and being familiar with it and going through enough different types of sessions and enough different types of trades to where you can refine your process, your trading strategy, the chart time frame you prefer to trade in, the times of the session you prefer to trade in, the levels that you prefer to take trades from, etc., etc. Um, so another thing too is that with the market scenario labels, you can now also determine through historical sessions what are the trade setups that you prefer, and do those trade setups that you prefer perform well or perform bad at specific market scenarios. So you may find as an example that a particular trade setup that you like to trade that doesn't happen to work on certain days all the time. Well, that you can see if it's because it's in a certain market scenario, and why does this trade work better that you prefer only on certain days? Well, it could be because it's when the market is in a certain market scenario. So the historical market scenarios in the context of having all the other historical market levels give you the ability to help refine your process further and see what new trade opportunities may present themselves based on you noticing a specific trade setup that happens to be a good trade setup that occurs in a specific market scenario over and over again, or refining your process for your existing trade preferences to see maybe there's some market scenarios that I would prefer just to avoid trading altogether. And then which are the market scenarios where I need to be more focused in doing more trades because they give me the best historical edge in my favor based on what typically happens in that particular market scenario, given the relationship to that market scenario and how it typically is trading, at least in recent sessions, uh, along with the type of trades I like to take. So market scenarios that may give you more of a green light to put the pedal to the metal, do more trading or be more aggressive or size up, etc. And market scenarios where you may just want to forget trading altogether, go do something else for the entire day and do not trade and just only trade during certain specific market scenarios where you know you have more of an edge in your favor for how you like to trade, your trade setups, and what levels that you like to trade. Okay, now we're going to go to the final part of this video. It is the following trading session day on February 12th. So we're just doing some last minute things here as far as getting the user manual together before we put this video out and send it to everyone. So we thought we'd take the time to look at today's session quickly and just show you some of the alerts again. So here you have the uh, acceptable range filter that's turned on at 85% for the standard default setting on that. And as you can see here, this candle closed below the 9:30 a.m. candle closed below the BBKPL within the acceptable range. And you have a 9:30 a.m. below BBKPL alert that pops up. Now this is set on the small label, so you can increase the labels. And then you have your standard continuous BBKPL alert turned on, also with the acceptable range filter. That's also set to the default of 85%. Of course, you can change, as we noted earlier, you can change that percentage to something lower if you prefer something lower than 85%. The way that you trade, that's fine as well. Just the max setting we would recommend would be a max of 85%, but that is up to you. Okay, so as you can see here, that's the difference in the alerts, is you have a little bit different text for the 9:30 alert versus just the regular one. And as you can see here, we did have a wick up, but it did not get the standard stop loss that we use, the mid BBKPLR1 on a bearish play on the bull bear KPL today. And we had a very nice move down, which went all the way to mid S3, S4. And then later on in the session at the end, we had a complete collapse and we went down to stop right at mid S4, S5 on the end of the day before we had a slight bounce up from that. So as you can see here, we had a couple of attempts here to touch S4. This one just went just a little bit short. This one wicked through it a little bit, and then finally at the end of the day it collapsed through it. Now just to show you, we'll go ahead and turn these alerts off so we can look at this area up here real quick. So we'll go down here. And there's the acceptable range filter again. Obviously, I'll just show you, if you turn these on normal, then they're going to be that size. If you turn them on tiny, then they're going to be that size. So it's just up to you. Anyway, the default is set to small, but that's whatever preference that you want. You can also change the color of these as well if you don't like the default color. Okay, so let's just go ahead and turn these off. And then we will turn off. Here's the BBKPL. This is the continuous one for a closed blow. And so we'll go ahead and turn that one off. Okay, so just a couple things I just want to show you real quick. So here you have this wick up. It gets very close to the 69.73.51. However, it does not if you look over in the data window up here. The high was 69.73.22 and the standard stop loss level, that mid BBKPLR1, is 69.73.51. So that, emphasizing again, if you're going to use the standard stop loss or whether you use the tight stop loss, your beginning initial trade stop loss is level based, and then if you're doing a regular trade and you're adjusting your stop loss, then you are then changing to a price-based stop loss. Price meaning the price you paid for the option when you're adjusting it to break even, or break even plus a profit buffer as price continues to move in your favor. So just to show you here, it did not hit. Obviously on some days it does hit and get stopped out, but on this day it did not. The other thing I just wanted to show you is here we have again, like we looked at in the previous session, the PMH bear standard stop loss. That's this line here, 69.81, because we also had a wick through and close below the PMH, the pre-market high. And here we have a reward to risk setting of 10, comes down almost to the mid S3, S4. But that is a pretty monster move here as well, basically from about 69.70 on these in that range here, all the way down to a risk reward of 10, 68.71. So it's basically 100 points of profit on that if you wanted to look at a max R10. Like I said earlier, we may come out with an update. It won't be in the near future. It might be a couple of months from now. We may come out with an update where you can increase the reward risk up to a much higher number. Because if we get days like this, and this is not even really extreme volatility, this is elevated to high volatility, but if you start getting extreme volatility where you can have 150, 200 point ranges, we don't see that often, but on days like that, something more along the lines of a risk reward 15 to 20 may be more appropriate. Or we may just make the cap maybe something higher, like 30 or maybe 30 or 40. That way, if you wanted to use a tight stop loss, remember the reward to risk is based on the distance of the stop loss versus the reward. So if you used a tight stop loss, it's going to be about half of this. So on that, it would only be equal to about RR5 on a standard stop loss. So like I said, for most people aren't trying to get, 100 points of profit, although that is great. Some people or a lot of people are satisfied with just getting somewhere between 10 to 30 points. But nevertheless, for those people that uh, prefer to have more of an extension available to them in the control panel, we will come out with an update at some point in the early part of this year where we will make that max setting greater than 10, something significantly greater. So if you feel inclined to make it a lot larger risk reward risk scenario for trades off of the YDH, PMH, PML, YDC, or YDL levels, and you'll have that available to you. So, like I said, it won't be in the near future because our programmer is busy completing the V3.0 versions of the other four daily key levels indicators, the NDX, the stocks ETFs, the Forex crypto, and the futures CFD. Okay, so that's going to wrap up this video. If you have an interest in subscribing to the SPX Daily Key Levels Indicator, whether it's for the quarterly access, the annual access, or the one payment for lifetime access, you can email us at daytradinggps@gmail.com to request a discount promo code to purchase the indicator. There are different promo codes for the quarterly access, the annual access, and the one payment for lifetime access. So if you send that request to daytradinggps@gmail.com, we'll send you a discount promo code for each of those different subscriptions, the quarterly, the annual, and the one payment for lifetime access. Thank you.